Please give me a moment while I connect to Facebook. I hope you are doing well. We'll be getting started momentarily here. And I think we should be live on Facebook. Hi everybody, welcome to my weekly video. I'm Sami Abasad, Director of Education at T3 Live. Hope you're doing great. We're gonna get started by taking a look at the market and then looking at some amazing ideas for next week. Swing ideas, that is. But before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. If you'd like to download a copy of my free ebook, link for that is in the description below the video. But without further ado, let's turn to the charts and get going. And if you know what to do if you like the video, and if you have any questions for us, reach out by emailing customer service info@t3live.com, info@t3live.com. So here we go. The market appears to have bottomed unceremoniously, you know, just after the CPI data came out on Thursday, I guess. Market had probably the biggest gap I've seen since the biggest up day, biggest gap and biggest up day I've seen since March of 2020. I don't think I've seen I think the Q's closed 7.8% on the day. I don't think I've seen a bar like that since March of 2020. So for now, we appear to have bottomed, especially on the Q's. I mean, Q's had a really strong move on Friday and a strong run up also on, a strong gap up on Thursday and a strong follow through on Friday. So for now, we should not be bearish unless the market negates at least the pivot on the daily chart. So the SPY, the IWM, you can look at any time frame you want. Look at that. I almost don't need to redraw the line. So there's the pivot. You know, as long as we don't break under it, the bias should be bullish going forward. It's not clear whether this is going to be a long-term or a short-term bottom, because the weekly and the monthly charts don't look so good just yet, but the daily for sure looks bullish. So here's the Q's monthly, still has that overhead resistance above that pivot, this pivot right here, and then the flat 20. In fact, it's going to be a declining 20 pretty soon. That's the Q's monthly. Here's the SPY monthly, not as bearish, and the IWM monthly also, well, I would say more bearish than the SPY, but less bearish than the Q's for sure on the monthly chart. So again, it's not clear because we still have all that overhead resistance and the 20 period moving average that's starting to point down. So it's not clear whether this is going to be a short-term bottom or a long-term bottom, but probably for now we have a bottom in the market and the bias should be mostly bullish. Okay, as a day trader, you do it day by day. You know, the market could be really bullish, but on some days it might be bearish. So as a day trader, day by day, but as a swing and a long-term trader, the bias for me going forward is going to be bullish. All right, unless obviously something happens and we break the trend or we have a really bearish move. So something like that. But as far as I can tell, I don't see that happening anytime soon. All right, so here is the list of ideas that I got for Friday. I literally have 92 items on my daily watch list for tomorrow. 92 bullish items alone. I only have a handful of bearish items, but here's kind of the ones that I picked for this video. I don't want to say they're the best, but they look the most ready. When I looked at them on multiple time frames, I used the hourly, the daily, the weekly, and the monthly charts. 4 time frames when I analyze swing ideas. Abercrombie & Fitch, your favorite clothing store, has a 1, 2, 3 on the daily chart. Long, stop, pretty tight, and target somewhere up here. So it's not a very high reward to risk play, but it's about 2 to 1 reward to risk. So it's not too bad either. APYX doesn't have a trigger yet, but it feels like it might have a nice move up because we were down a lot. The APYX was down a lot and then put in a big gap down, and it looks like it's going to rally for a couple days. So I like it long just over Friday's high, which is 192, stop under 170, and then has room all the way up to $3 or actually more. I mean, 375. I'm not saying it'll get to 375, but you can manage it on the way up. Okay, AVTR is a 1, 2, 3. What I like about the AVTR is no doubt the breakdown failure, or you can call it, you can see it's a breakdown failure. And then now has a 1, 2, 3. It's not my favorite 1, 2, 3 because it didn't stay inside of the range of the first bar, but it looks higher over $22. Stop under 21.28 and target, maybe target 1 about 23.75, target 2 about $25. Okay, a lot of 1, 2, 3 patterns setups. The 1, 2, 3 pattern is basically when you have an igniting bar, a resting narrow range bar that ideally you want to see it stay within the top third of the first bar's range. And then if we get another bar tomorrow that takes out the highs of both bars 1 and 2, then you basically get a trigger. And the trigger is over the higher of bars. This is bar 1, that's bar 2. The higher of both bars 1 or 2, stop is under the doji bar's low. Okay, and then target is the next resistance area. It looks to be about 73 or so on the BF.B. Okay, BIIB, I've had my eye on this for a while. It's a monthly 1, 2, 3, and it does look higher, at least to 340 or so, at least. So I like it, but the way I would play it is not, I wouldn't put my stop under the monthly bars low. That would be too big of a stop. So I'd play it off the hourly because we have a nice base breakout, and then it shouldn't come back under about 279.50 or so. If it does, I wouldn't want to be in it anyway. So that's kind of the play. Over the highs, stop under the red bars low, which was Wednesday's low, whatever the low is. Okay, you can check for yourself. I'll check for you right now. 282.18. DVAX, I liked it a lot when it was a 1, 2, 3 setup right here. I had a call on it, in fact, but it didn't trigger. It came in, and now it's back up, and it does look good, but the stop is not that tight. Stop under the red bars low, entry right here, and then target maybe $15. If it gets to 15, it'll be about 2 to 1 reward to risk, which is what I usually look for. At least 2 to 1. 5 is a 1, 2, 3 coming after a really bullish gap. A gap over a big red bar, that's always bullish. So long over 158.10, stop under 151, and you gotta zoom out to see what the target is. And as you can see, it's it's that prior pivot high around slightly over 180, maybe 182. We can check. So here it is. It's 186. 186. So it's got some room to run for sure, but it's a big stop. FRPT looks higher. I played it as an earnings play over on this day, and it worked, and now it's been basing. It tried to break down on Wednesday, as you can see, and it failed. So it looks higher over the base, stop under the red bars low, and then again you have to zoom out to look for the next resistance area. It's already above this prior resistance, so the next target area is around $100 or so up here. So it has a lot of room. FRPT. HCA is another 1, 2, 3. We had the gap up on Thursday, the narrow range bar, not really a narrow range bar, and then the daily base breakout. So I like it over Friday's high, stop under Friday's low, and then zoom out for the target. Maybe target 1, the prior red bar's high, and target 2 somewhere up here around 260. Okay, HR appears to have bottomed on the daily chart. Notice the big green bar, the narrow range bar. So same setup, same exact setup. Over 2090 by 2035 long. IHRT, same exact setup. So what you want to do is not play every single 1, 2, 3. You want to pick the ones that are your favorite setups, or that ones that have high reward to risk, or plays that you think are set up really well on multiple time frames, so you can look to keep them long term in case this proves to be a long-term bottom in the market. So I'm not going to play every one of these, but I've picked a handful for the newsletter, and if you want to know which ones exactly, obviously you'd have to be a subscriber. You can find more about that in the description, but the same setup. IHRT 1, 2, 3. ITCI is a little bit different. ITCI is a monthly buy setup, so if we look at the monthly chart, It's beautiful. Now the setup already triggered when it reported earnings this day. Already was the entry was over here basically, but we do have kind of a base. It's not a tight base at all. Long over this pivot right here, over about 55. Stop right here as a long-term play. But because the stop is really large, even if the monthly buy setup works, it's not going to yield a great result. It'll probably be 1.75 or so, okay, in terms of reward to risk. Another 1, 2, 3 on the KIM. It's going to be, okay, this is not a 1, 2, 3. This is a base breakout. It actually triggered on Friday, but I wasn't aware of it. It didn't, I didn't have it as part of my watch list, and now so the entry should have been over here already. Stop under the red bars low, but when I scanned this weekend, it showed up. Probably before that, it didn't have enough volume, so I never, it was trading about 100K per day or so. So it wasn't very liquid. On Friday, it looks like it did 600,000. So it looks good, except late, over 103, long. Stop under 80 cents, and what I like about it is nice daily base breakout, but also nice weekly. And let's take a look at the monthly, and the monthly looks pretty good too, but especially the daily and the weekly, those look really, really good. Unfortunate thing is it's already triggered, and it will be, the entry will be about late by about 9 cents, The OB trying to transition higher also, long over 460, stop under 420, and maybe target about $6 or so, okay, on the OB. OC is beautiful because it had the gap. So like reminds me of I think the 5 also was a big gap over red bar. So that's always the preference, is to get the igniting bar to be a gap up over a big red bar. So I like both of these a lot, OC and the FIVE. Now in terms of the OC, I don't know if it has enough reward to risk. So you got all that resistance above. So I'm probably going to end up passing on it. I don't think this made the list in the newsletter for tomorrow, but it's a beautiful 1, 2, 3 to be honest. It's really beautiful. Another 1, 2, 3 setup on the RCI. RCI is also in a nice uptrend, higher highs, higher lows. SAVE is different, is a weekly buy setup. So we have the pullback. We have also the shakeout bar, that red bar, and then long above it, 38.80, stop under 31.30. Target about 51, and if you're lucky, it takes out the prior high and keeps going. Okay, I think that will depend on what the market ends up doing, whether this ends up being a long-term bottom or a short-term bottom. By the way, just for fun, feel free to post in the comments whether you think it's a long-term or short-term bottom. Feel free. I like to do polls every now and then in the room to see how many people think, or what the percentage of people that think this is a long-term bottom or short-term bottom. And when I have extreme readings, that's when you can fade the extreme reading usually. Okay, so if everybody's bullish, you can be sure the market hasn't bottomed. If everybody's bearish, you can be sure the market is bottomed most of the time. It doesn't always, it's not an exact science, but when everybody's bearish, it means everybody's already sold. It means the market has likely bottomed, and vice versa. When everybody's bullish, it means, you see what I mean. So it's you go against the extreme. SVM is a daily base breakout. So over the highs, Friday's high, stop under Thursday's low, which is 273. TBPH already broke out on the daily, but if we zoom out and look at the weekly, I mean, that's too good of a weekly chart. It looks really, really beautiful. Triggered already, has room to about, let's see, this red bar's high, that's $13. It's not a lot. It's about almost $2. But I do like the pattern a lot. So long stop would have to be here. Not sure about the reward to risk. You might want to calculate it to make sure there's enough reward to risk. And last but not least, the treasuries, the ETF for the 20-year treasury, like it higher. Long, and then stop can be as tight as here, or if you want to give it more room to ensure you don't get shaken out, under the green bars low. Okay, I think we have a bottom. Likewise, we have a top in the dollar. Unfortunately, I couldn't figure out a way in it. Didn't see a good entry, but look at the monthly. Totally climactic. triggered already. It should have been shorted under 29.50, but I was trying to get cute with the entry and get a tighter stop and never got it. So now the TLT I think also bottomed, but I would like to give it more room and make sure I don't get in before it takes out 98.50 with a stop under 96.60. And then if you look at the monthly chart on TLT, it's pretty darn good. I mean, down a lot into support, and that's a pretty good chart for a long-term trade, in my opinion. Okay, now with long-term trades, the way it is as long as the original stop isn't hit, you just try and hold on to the position and don't manage unless it gets really close to your target area where you think you should exit anyway. But you try not to manage as long as your original stop is not hit. Okay, so that's the thing with swing trades. You have to manage because you're looking to get out after a few days most of the time. Here's the shorts. They're not as good. EQRX had a very, very bearish gap down that took out I don't know how many months worth of basing, got below all of that, and so short stop. If Friday's bar was smaller, I would do it for sure and then target right here. But Friday's bar was pretty big, so we don't have as much reward to risk on the EQRX. JANCE or JNCE has a beautiful 1, 2, 3, though Thursday's bar was really big. I like it when the initial igniting bar isn't that big. So in this case, it's huge. The same with the VCSA, had a huge igniting bar. I like it to be about twice, 1.5 to 2 times the average size bar. Well, this is about 5, maybe 6 times the average size bar. That's the only issue. Otherwise, it looks really, really pretty. The VCSA and the JNCE, super pretty. So I don't know if they're going to follow through or not. OABI is a daily sell setup. Was falling apart, rallied, short under 283, stop over 319, and target about $2, 197, but let's just say $2. TBT would be the inverse ETF for the TLT. I think this has twice the leverage, I believe, so you get more bang for your buck. So this would be a short under 33.97. Maybe one can use 34.60 as the stop in the case of the TBT. TDS doesn't look ready yet, doesn't look so good. Weekly 1, 2, 3, so under last week's low, stop above last week's high. But those are difficult setups. So the longs look a lot better. TIL already triggered last week, but it still looks lower. It's an open play in the newsletter, but it still looks lower. USAM is also another weekly 1, 2, 3. It's exactly like the TDS, exactly. So under last week's low, stop above it. And then we already talked briefly about the VCSA, had a very powerful gap on Thursday, a narrow range bar on Friday, and so short under 192, stop over 203. So those are all the short ideas I could find, whereas the long ideas, like I said, I found 92, and I'm only showing you here maybe a dozen or so. All right, well, I hope you enjoyed today's video, and if you have, again, I'd appreciate it if you hit the like button. That helps support our channel. If you have any questions at all, reach out by emailing customer service info@t3live.com. I'm Sami Absad with T3 Live. Good trading, everybody. Ciao.